Breakout trading often begins with a simple pattern. Price pushes beyond a known level, and attention rises because a new trend may be starting. Yet a breakout is not a signal to act on its own. The market often tests patience by breaking out briefly, then slipping back into the old range. For that reason, confirmation tools are used to separate a real move from a false one. The first confirmation tool is volume. When price moves beyond resistance or support with noticeably higher trading volume, the move often has more conviction. A breakout supported by thin volume can be fragile, while strong participation suggests that more traders agree with the direction. The second tool is a retest. After breaking above a resistance level, price may return to the same area and hold it as support. If buyers defend that zone, confidence increases. The same idea applies in reverse for downside breakouts. A clean retest can be more persuasive than the initial surge. The third tool is candlestick behavior. A breakout candle that closes firmly beyond the level, instead of merely touching it, can show strength. Follow-through candles are even more useful. If the next candles continue in the breakout direction without immediate rejection, the move is easier to trust. The fourth tool is momentum indicators. Tools such as RSI, MACD, or moving averages can help show whether the move has energy behind it. For example, a breakout accompanied by rising momentum and a trend-aligned moving average is generally stronger than one happening against the broader direction. The fifth tool is market structure. A breakout that also creates higher highs and higher lows, or lower lows and lower highs, fits a broader trend framework. When structure confirms the direction, the breakout is less likely to be random noise. The sixth tool is time confirmation. A level broken on one short time frame may mean little if it does not hold on a higher one. Traders often wait for confirmation across multiple time frames to reduce false signals. No single tool is perfect. Volume can rise and still fail. A retest can break again. Indicators can lag. The practical approach is to combine several confirmations rather than rely on one clue. A breakout with strong volume, a clean close, a successful retest, and supportive momentum is generally more reliable than a breakout with only one of those features. In trading, confirmation does not remove risk, but it can improve discipline.